It's always fun catching up, although you're never that positive about the world economy. Are you more positive now than you were 6 months ago or less?
Well, I would say that compared to 6 months ago, where there was a serious risk of a real hard landing for the global economy, those risks are reduced right now.
No.
That's the good news. But I think that there's still an open discussion on whether the global economy is going to achieve a soft landing as opposed to a bumpy landing. Where a bumpy landing will be a short and shallow recession. That short and shallow recession has already started in the Eurozone. The UK, with very high inflation, is probably headed towards that recession as well. In China, there is a sharp slowdown of growth. It's not just cyclical, it's more structural. United States, still the jury's out on whether we'll achieve a soft landing or whether there's going to be a short and shallow recession. So it's a mixed bag.
But that depends on what? So in the US, is it Fed policy or is it just a tight labor market that could suddenly collapse?
Well, in the US, paradoxically, so far, in spite of Fed hiking rates above 5%, the economy has grown recently above potential. Tight labor market, tight goods market. That's good news in terms of achieving a soft landing, but it's actually bad news for the Fed because it implies that the Fed is not done yet. They may have to hike once more, maybe twice more. Eventually, the Fed funds rate might have a 6 handle rather than a 5 one. And the more that happens, the more the risk that eventually there might be at least a short and shallow recession. But the economic data recently have been reasonably strong, even if it's slowing.
But Nouriel, I don't really understand what's changed in the last 6 months. So there could be a delayed effect of all the interest rate rises with defaults in companies, and the data from China could point to a much worse economic picture. So why are you now more positive than 6 months ago?
Well, there has been a bit of unwinding of the negative supply shocks that occurred during COVID. Yeah. Commodity prices fell, some of the supply bottlenecks have been reduced and so on. That was positive. Fiscal policy has been reasonably expansionary in the United States, but also in other parts of the world, keeping demand stronger while the Fed and other central banks were tightening. Some of the geopolitical tensions have been somehow reduced.
How odd is that? The fact that a lot of these adjustments have happened by themselves?
Well, we knew there would be some unwinding of the COVID shocks that implied initially lower growth and higher inflation, now lower inflation and higher economic growth. But certainly it's been surprising that given the amount of monetary tightening, some economies have been resilient. But the most resilient economies are the United States. As I pointed out, the Eurozone is going towards a short and shallow recession. UK, China is a structural problem. So you cannot generalize what's happening right now in the global economy. The US is probably the brightest spot as of now.
Is there anything in Europe that policymakers can do to avoid stagflation or at least make it shorter?
Well, the reasons why we have stagflations are more structural rather than being cyclical or anything to do with monetary or fiscal policy. There is process of deglobalization, there is decoupling, de-risking, geopolitical depression, restriction to essentially migration, there is reshoring and friendshoring of manufacturing, there is global climate change. Those are all structural factors that over medium term reduce growth and increase cost of production. And the structural reforms that increase actually potential growth are occurring too slowly. Technology in the future is going to be a force for stronger growth and lower inflation. AI, machine learning, robotic, automation, quantum, biotech, and you name it. But the effects of that on growth and inflation is going to take time. In the short run, the stagflation forces are more important in some parts of the world.
What do you make of China right now, and what are markets most misunderstanding about the world economy and actually how equities and bonds should behave?
Well, China, the reduction in growth is not cyclical, it's structural. It has to do with aging of population, debt and leverage, housing overhang, state capitalism, a backlash against the private sector that depresses the sentiment of household and the corporate, geopolitical depression, the policies that are effectively Marxist-Leninist of Xi Jinping and so on. So I think that potential growth used to be 10, went to 5. I think it's at best 3 to 4%, and that's not going to change because it's emphasizing security control over opening up and reform. That's the main thing. Yep. I would say on markets, in my view, if the global economy is going to weaken, if there is still a meaningful chance of at least a bumpy landing, probably markets have rallied too much today. and that's maybe going to lead to a correction in the second half of the year if the economic data are still weak and if central banks have to hike a little bit more as a way of essentially fighting inflation, and that's going to lead to a nominal and real rates rising as well. And that means that probably bond yields may go higher rather than lower while inflation is still high and central banks are still fighting inflation.
But a correction, what, a 10% correction in equity markets, or is that too high?
Well, a 10% correction is not totally unlikely. If the economy starts to soften up globally, and if you have still inflation that is above essentially target, with core being still high in US, UK, Europe, central banks hiking somehow more, I would not be surprised if in the second half of the year you get a 10% correction in global equity markets.
So what would you do if you were Bank of England governor?
Well, Bank of England is facing a dilemma. On one side, growth is lower, and is lower also because of a self-inflicted goal that was the Brexit decision by the UK to reduce potential growth and increase cost of production. So it's the most likely case of stagflation. On one side, the economy is headed towards a sharp slowdown, potential recession. On the other side, core inflation is still too high. And therefore, you face a dilemma, or a trilemma in the case of the Bank of England, because you want to have lower inflation, but that's going to cause a recession, and higher interest rates are going to imply eventually financial instability, because private and public debts are high, and debt servicing ratio are going to rise as interest rates go higher. So you might have actually a perfect storm in the case of the UK.
Is there anything that actually fiscal policy or just government policy can do to try and mitigate that?
Well, fiscal policies are also in a dilemma, because if you want to maintain growth, you should have expansionary fiscal policy, but now fiscal policy at cross purposes with monetary policy. If you have too much essential inflation, it's because there was too much demand. That implies that cyclically, structurally, fiscal policy should be retrenching. The opposite is happening, and that's make the goal of central banks of achieving price stability harder rather than easier.
Okay, but so what does the UK economy look like in 2-3 years? How do they build the economy also to make up maybe some of that lost output?
Well, the reality is that you'll have to effectively reverse de facto, if not de jure, Brexit, maybe have a custom unions.
That won't happen? Do you see that happening?
Well, you know, people talk about Brino, Brexit in name only. If Labour were to come to power, probably they're not going to reverse formally Brexit, but probably the relation with Europe is going to improve. Maybe there is a chance of eventually going to a custom union of that sort. And UK has to do, like everybody else, structural reforms to increase potential growth. I must say that actually in some of the technologies of the future, like AI, biotech, the UK has actually lots of great academic research, venture capital, firms, startups, and that's where actually the UK should emphasize. Its strength is going to be to have the kind of reform that lead to technology and innovation, and if they do it done right, they can do it.
Bank of Japan, how much of a nightmare is it trying to go against everyone else? Will they just have to, give up on yield curve control soon?
Well, they will give up on yield control, but they're still waiting to see whether this increase in inflation and core is persistent or not. I think they will gradually phase out the YCC for the 10-year JGBs and then go to the 5-year over the next 6 months. So, yeah, they're still behind the curve, but inflation is still moderate in Japan. I don't worry them being behind the curve, and they're worried about making a mistake of phasing it out too soon, and then maybe if inflation is too low, then they have to reverse themselves. So I think they're going to get it mostly right.